Alright, good morning. Let's go over today's trade plan. So in yesterday's recap post, we covered the idea that at this point the momentum had shifted to the buy side, and as long as TF can hold above 1116 and ES can hold above 61 to 63.5, the upside momentum would likely continue, and that's what we saw in the overnight session, where ES got within one tick of the open gap at 1873 and built some decent volume around 1872. So at this point, we are going to be using the 61.75 to 63.75 as the bull bear zone to establish our directional bias. And again, as long as TF is holding 1116, we should be all right on the upside. Ahead of that, we do have initial support at 66 to 68, with the gap fill right at 66. On the econ calendar, we have consumer confidence at 9 a.m. Central, and then the FOMC meeting begins today, and the announcement is due tomorrow. So because of the FOMC announcement coming in tomorrow, we could get a limited range today. Now, that doesn't mean that we can't continue higher. It just means that we will probably get responsive selling at initial resistance, and that can be used as the primary upside target. But then once you hit initial resistance, it's unlikely that you're going to get too much more than that. It doesn't mean that you're going to fail there, because right now, heading up there would confirm buy side in control, but you might not have too much upside potential left once you've already hit the 77 quarter, 79 quarter initial resistance zone. On the downside, you really want ES holding above bull bear zone. And if this market is truly strong, then we should not really even get, much of a pullback here. If the market's going to head higher and test the initial resistance zone, then we really should hold it even above 66, 68, and not really get much of a pullback. In NQ, we want to, see the Nasdaq holding above 35.45 to 35.50. That would confirm some upside strength in NQ, and of course it would help the upside scenario in the S&P as well. So overall, I think given the FOMC announcement due tomorrow, we're probably going to stay overall stuck in balance, but the recent range is relatively wide, and the high of the range is 82.5. So we do have a little bit of room on the upside, but we're probably not going to go beyond 82.5 today, and might not even really go beyond initial resistance by much. But overall, I'm thinking that if we head lower, we will still find buyers, and if we break the bull bear zone, then the short-term momentum could shift to the sell side. But we'll just have to keep in mind that idea that today could be limited range, and if that's the case, then even if we break the bull bear zone, we could just go down to like 60 or 58 and then just kind of chop and balance from there. So right now, the main scenario that we're targeting is that S&P puts in a small pullback at most, and then the buyers continue to be active and we get a push higher to initial resistance. If we start breaking lower and coming down below initial support, that would definitely be a red flag. Bull bear zone is really the key area at this point. In the other markets, 1116, key level in TF, 35.45 to 50, key area in NQ. And as long as we can hold above those levels, then ES should be all right for a move higher. But right now, the buy side is in control, so we're not really focused on shorting this market. We would have to see some pretty clear signs in order to shift our bias from the upside to the downside. We don't want to just get a small pullback in the market and shift our bias too quickly. That can be problematic as well, because that pullback could actually be a long opportunity, and we would really have to see some very clear signs. The internals diving lower, TF breaking 1116, NQ breaking 35.45 and liquidating a bit, and then perhaps we'll be cautious on the long side and might start to look for shorts. But right now, based on the way this market is set up, we're trading near the recent 2-day high around here, 72, 73. So, we could get a break above this recent 2-day range and then go up and test the recent swing high at initial resistance and 82.5. So that's the primary scenario in play right now. Consumer confidence at 9 a.m. Central. So those are our main ideas. Let's see how well the buy side can hold up this morning, and we'll take it from there.